Well, this is a first tonight. I don't know how you guys arrange this, but the first two people are Andy and Andy. I think DTS has risen to a new level that we have two different Andys at the same presentation. And one knew to capitalize his name and the other did not for some reason. I don't know how they figured that out together. So if I need to call on one or the other, I can say small a Andy or big A Andy. Hi, Andy. He's listening too. All right. Hi, everybody. I think it just struck 5 o'clock, so I may officially begin. Welcome tonight, everybody. For those of you who have been to a lot of these, you know the procedure. Every week we do have some new people at DTS and new people attending these. This is what we just call an educational event. It is an hour. We're always done by 6 o'clock, so we're not stretched out here. And I try to do a different event every time in 4.5 years, going 4.5 years. I really haven't repeated anything. A couple times I have when I did guest presentations somewhere else other than here at my DTS, but basically, and naturally, there's only so many topics you can discuss, so sometimes there's some overlap and sometimes there are different discussions about similar topics, but it hasn't been the exact theme really yet. I may at some point redo a couple old ones, but I still have a list of things to talk about and it hasn't really ended yet, so until that list runs out, we'll just keep going with new topics if that's okay with everybody. Tonight is called the 4 Secrets to Trading Investing, and of course secrets was in quotation marks so that if you went ahead to read the very first line after that, wherever you saw this, it says it is most intentionally in quotes because it's not meant to be one of those crazy discussions where you'll be shown some magical blah, 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 blah. I think one of the biggest detriments to a lot of traders is searching for what we call the Holy Grail, or the Holy Grail you may kind of translate to putting secrets in quotes as if there was some magical indicator or phrase or line or something you could do that would just make money for you. It's unfortunate so many people look for that because anybody with common sense, I think anybody even in grade school or high school would tell you that it doesn't exist. If there was such a thing, everybody would use it, and like most things in life, it's just a little bit of work is all, a little bit of learning, understanding. There's nothing really magical about it. The shame of it is most people don't ever want to do that. So I'm going to run through and show you these 4 things. Secrets, question mark. Well, they are not known to most people, so they are unknown, but they're not really secrets. Unfortunately, oh, by the way, I usually give you a little, usually in the email, going out in the afternoon, I give you a quick quote about whether I think this will be a spectacular event or a boring event. I think this will be a little more boring, to be honest with you. I always like to not disappoint, and your time is valuable. I think it's as important or more important than any other topic. That's really a different question about whether or not you may think it's boring. The last couple I think were spectacular in every way, but this one you may find to be boring. Yeah, you might want to get some wine. That's fine. That's fine. But remember, boring and important aren't the same things. A lot of the reason I think a lot of people struggle in trading, there's no reason to really, but unfortunately the boring aspects of trading are what people don't like to do or listen to. So we're all looking for that magical potion that's going to make money, and it doesn't exist. So a lot of these boring ones are really the important ones, and those who've been around for a while know that already. Yeah, that's right, Mark, exactly. You were typing that as I was saying it. Unfortunately, knowing these secrets doesn't always mean you know how to apply them, but awareness is the first step, right? It's like, I think, in Alcoholics Anonymous, I think what one of the first steps is, admitting you have a problem, or I'd say knowing you have a problem. In trading, a lot of times, it's just simply knowing you have a problem. I haven't told this in a while. There was a day I realized that. When I think I'll take the time to tell this story today. When I started off a long time ago, I hate to say it, but it's really a long time ago now, 22 years ago. I was one of those people who wanted to learn on my own, and that's why I very much respect people who want to do that, and I even try to help you to the extent that I can, and that's why the free stuff page is there. You guys are all aware of the free stuff page, right? Let me just get that out there. If you're newer, you may not be aware of that. You want to go visit that, and you can spend the whole week there if you wanted to. But when I started out, I tried to learn on my own, and I went through, 3, 4, 5 months, and I don't know. I think I was kind of breaking even maybe, which really is good. I mean, you look at the average person, it'd be good to break even. But then came one day where I had a little bit of bigger money out there and some trades, and I remember they were options on oil stocks, I remember, and I was taking a hit during the week. I was not doing well. And they all came back one Friday afternoon and they were kind of break even. And I had this big decision to make. Do I get out of these even? Because I'm like, thank you, Lord, they're back to even. But on the other hand, I took these for a reason to make money. And I'm thinking, well, if they start making money next week, I'm going to be mad I got out of them. And as I sat there and looked at the charts and studied the charts, I came to realize that was my moment of Alcoholics Anonymous, that I really didn't know what I was doing. Let me ask you this honestly. Has anybody had that awareness like in trading in your past? I mean, obviously it would have to be in your past, because if you're living it right now, you probably don't know who you are. But has anybody else had that where you just kind of said one day, long ago, I'm clueless. And you won't know it until there's really pressure on. That's what happened to me. There was big pressure on me. Yeah, and I had to look at those charts, right, Mark? I had to look at those charts and make a big money decision. And I sat there looking at them saying, I don't know what I'm looking at. I pretended I did, just like people, that follow different things, or you follow fundamentals, you look at this and, everything is going up, the market's going up, you're looking at good news, you're looking at good fundamentals, everything, doesn't matter what you're looking at, right? Everything's just going up, piece of cake. But all of a sudden things fall apart and you realize, I don't know what to look at, right? And that's your moment of awareness. And that's when you come to realize, hey, I have to, if I'm going to do this, I have to figure out what I'm doing. And so I was chatting with a trader student of mine, and doesn't matter who or what, but he was somebody that all of a sudden, it just like, I'm sure a lot of you experience this, but it's just like you struggle a little bit and you have some losses and you come back and you do this and you do that. And all of a sudden one day, it's like your head is above the clouds. Anybody experience that feeling too? I bet you, Mark, you have. All of a sudden you look around and you go, wow, it was that easy. I mean, it's hard when you're underneath the clouds, but all of a sudden you look around and you go, this is all, I don't mean to say easy, you know what I mean. I mean, I don't mean it's easy, but you look around and you say, what was the struggle? All you have to do is this and this. It's not that hard. So anyways, might I digress? I got all of that because of this comment about awareness being the first step, because I think it's an important thing. So these 4 secrets were picked a long time ago. It was the subject of an educational article that went out a long time ago. But let's take a little deeper dive into it. These are picked as the top 4 from personal experience and years of working with many traders. We all think pretty much the same. A lot of times, so many times, even in events like this, people will ask me how I got inside their head, or, am I looking over their screen? I know exactly what they're doing. That's because we're all the same. Most of you go through the same stuff. I went through most of the same stuff. We think the same way, and that's why sometimes it's not hard to figure out what people are doing or to teach it sometimes. I'm not going to read this because that was on the email as a little introductory thing, so you can go back and read your email if you want. I'm not going to read to you. Getting right into it. Here's number 1. Here's the first secret. New traders, and just as often experienced traders, are often so bad at managing trades that their results would be incredibly improved by not managing at all. If you do not manage, it means you let your trade play out until it hits the targets or stops out, nothing else. This is called all or nothing trading, and it's not necessarily the best way to manage, but there's a huge chance that it beats what you are doing right now. Let me just pause for a second here too, because I meant to go on to one other little comment while you read that slide. Who is this directed to? I guess is one of the topics we should just hit real quickly. 4 secrets. And you notice that most all the topics are directed to try and say that, well, sometimes traders struggle, and here's 4 things that are key. And you notice the slide here says something about, 90% of the people who don't follow these things are going to struggle. And that's not an exaggeration, because, I think that's just what the stats are. And it comes from not doing this. What does it mean to struggle? What are the problems getting in trading? Well, there's different levels, obviously. If you're brand new and you just try and trade without having a clue what you're doing, well, there's your first problem is you don't know what you're doing. You don't get the proper education if that's what you're going to do. A lot of people take some quick classes and they learn techno analysis 101, like I always call, like you'd find in the bottom of a Crackerjack box, and they don't succeed. But I'm directing this to people who are beyond that. I'm directing this to people who whether on their own or whether through some education, they kind of know what they're doing. Now, obviously, probably not good enough to be really making serious money, or I guess you wouldn't be here listening to me. But that's who I'm kind of directing these at. So I know when we say, why do people struggle or why do you fail? There's all kinds of reasons along the way. But I'm assuming that we're a group that is beyond understanding that you do have to learn something here, and you're at a point, and I'm directing this to people who maybe even know the charts fairly well. And they could say at the end of the day or at the end of the week, hey, the stuff I was looking at went the way I thought it would, but I didn't make any money from it. That's who I'm kind of talking to. Does that make sense, everyone? In these 4 secrets, if you will. Does that make sense? So if you're new, you may have to aspire to even get to the point I'm talking about. In other words, there may be a whole level of problems above where you are right now if you're fairly new. So management, if you've been at a few of these, you've probably heard me say that, hey, this has come up before. And it has. I think there's only one presentation I've done that was devoted to management. I'll show it to you in just a minute. But management makes its way into several presentations, as I mentioned, because anytime I'm going to talk about, the top concepts, biggest reasons, best thing to know, biggest reason to fail, all of those topics, management is in there, because one of my sayings is that at the end of the month, your management is going to make or break you as a trader, period. It just simply is. Now, naturally, it presupposes you even get to the level where you have good trades, but the point is a lot of people end up having good trades and they still don't make money from them. And it comes down to management all the time. You don't have the odds in trading to the extent that you can just throw away good trades. And that's what it amounts to for some people, right? I don't know how you want to phrase the odds in trading. Obviously, if you know what you're doing, you make money, so the odds are in your favor, but I don't know how you put a percentage on it per se. There's this whole concept of expectancy where you kind of blend your chance of winning with the amount you win and all that, but obviously you have a good expectancy if you're making money, but the odds aren't that great. It's not like you have 90% chance of making money every day, and I don't know what that number even means, but the odds are such that you can't throw away good trades. Does that make sense too? You just can't throw it away. You can't throw them away. You have to wring every penny out of a trade that's a winner, and you have to make sure your losers don't get out of control. And I know you've heard that before, let your winners run, cut your losers short, all that good stuff. That's a nice saying, but you have to figure out how to do it for yourself in a way that you can actually do it. Managing trades, a couple of presentations on. There's just a good reason for this. It's the reason it's the top 4, because management ends up being a big deal. Again, this is about awareness. In these webinars, these ETS special educational events, obviously the goal is not necessarily, in some cases, I try to train you on things. In some cases, it's beyond that. It's people that would actually, take a full-blown seminar program, have the time to do that would get into it. But a lot of the issue here is just awareness, to understand. And that's what I want to get into here, is how you can find out how you're doing, how you can go about trying to solve it on your own, right? It's about awareness. There are 2 key concepts for managing trades. One is the technical expertise, knowing what to do, right? Agree? There is something, you have to be able to look at a chart and say, where's this chart possibly going? How's it going to get there? What are reasonable levels to take money at? Do you agree with that? Comment is there's a great deal of technical expertise that goes into the understanding of how to manage a trade, right? Correct, everybody? Disagree? Agree? By the way, there's only 2 charts in here. If you're here only for the charts all the time, there's only 2 trades in here that I've done, because this doesn't lend itself. You'll see some of the topics. It just doesn't lend itself to a chart per se. There will be a chart here about this in just a minute. But that's a part of the problem sometimes. Is if you don't know where something is going, you're going to be very itchy about when to take profits, because you're never sure where it's going to go. And I'm never sure where something's going to go. But I know where the odds are, and I know what makes sense to try and push things for bigger targets, when to get a little more protective, that type of thing. But the second issue is this. It's the discipline to do what you're supposed to do. And this is usually the bigger problem for people. Now, even if you admit that you're not that great at number 1, even with the knowledge you have for number 1, you'd probably do a lot better if you followed number 1. Does that also make sense? So maybe in your management skill level, if we could just grade it from 1 to 10, with 10 being great, it's nice to be a 10. But even if you're a 5, let's say a 5 would make you decent money, would make your living. But the problem is the level you have at level 5, you know what to do, but you don't do it. So you end up trading like a level 1 management trader. Any of you feel you're in that category? If you're not sure, I'm going to tell you how to find out in just a minute. And here's a fun one that I mentioned a couple of times too. Most of psychology, not this, but most of psychology and trading comes in the management process. This is most of the problem. Now, there are some people that have trouble hitting the button. That's a psychological thing. There are people that wait too long. I mean, there's some things with entry. I get it. But for most people, the vast majority of psychological problems all comes in management, right? Getting from point A to point B and trying to get as much as you can of point B if it doesn't get there. And also, here, point A, you enter. You have a target in mind up here, right? Your stock may do this. And of course, your goal is to be here when you get that target, right? But what if your stock does this? Your goal may include getting something from this. That's a hard distinction. It's not always easy to do. And it requires a consistent plan and a knowledge of the chart. But here's the fun one that I think I like to say a lot, is that ironically, the best way to get better at number 2 is to be great at, it's supposed to be number 1, not at 1. It's supposed to be is great at number 1. In other words, if you really want to get good, if you want to get better psychologically, being able to do what you're supposed to do, one of the best ways to do it is to not be afraid of trading. And the analogy I pose to people a lot, any of you do public speaking at all? Give me a 1. Like to a group bigger than a dozen people, whatever. Any of you do public speaking? Okay. I mean, so you've been doing it for a while. If you're up there, Mike, Jeff, if you're up there, Chris, if you're up there and you're talking about your topic, whatever it is, right? And you're an expert at your topic, right? Do you have any fear at all talking to those people? Yeah. No. Zero. I'm the same. I mean, I've talked in live groups before in my past, several times, large groups. Zero fear at all. Someone asks me a question, I can answer any question they want. You want to have an argument, I will not only debate you on the topic, but I'll drive you to the floor because I know what I'm talking about. But put me in front of a group and I'm not on my game, or I don't know the topic we're talking about as well, or I'm trying to fake it, you're scared, right? You're nervous. You ever have that where maybe for some reason you have to give a talk and you're not quite, right? I've been improved numerous times in slides. Okay. Yeah, if you're trying to fake it, then you get nervous, right? Because you don't really know what you're doing. You don't have the confidence. Well, think about that. Apply that to trading. It's the same thing, right? If you knew where the chart was going, if you could look ahead in the future and see where the chart's going, you'd have no problem managing it, right? Matter of fact, if you looked into the future and saw at the end of the day your chart would be at its target, you'd go play golf for the day, right? Who cares? It's going to make it there. Well, we never have that confidence. But imagine a trader who has really good confidence, knows his chart, knows his patterns, knows what he's doing, and he has a very good sense that stocks can get to point A. You, new trader, you don't have a clue. I hope it gets to point A, but every time I get to point A, it just falls apart. So you're going to be taking little profits along the way. Does that make sense? Does that make sense, everybody? And that's all it has to do with this little comment down here. Yeah, I joke around, Chris, when I teach the seminar. Sometimes I'll finish this long discussion on something, and some people go, wow, how do you go? And I tell them, well, tell you the truth, when I just explained that to you, I was thinking about what I was having for dinner that night. I mean, that's where I am in teaching trading. It's like the words flow off my mouth. You just get me going, like just a little jump start, and my mouth just takes over and finishes the whole concept because I've said this stuff so much. All right, let's move on. Before I go to the next slide, let me ask you a couple questions here. You take a trade and you lose money. You lose money, right? The end of the day comes, you took several trades, most of them lost money. What's the next step? What do you do? What do you do in terms of looking at that trade that lost money? What's the question that you ask? Give me the questions, everybody. Here's a trade that lost money, boom. Okay. Why? Well, there's even a question before why, sort of. Well, maybe why is the right thing, but right, Joe has it exactly there. Yeah, the first question is, was it a bad trade, right? Losing trades and bad trades are not hand in hand, correct? You can have good trades that lose money, you can have bad trades that make money. So the first question on a losing trade is to say, well, was it a bad trade, right? In other words, and that question comes down to, did I do what I was supposed to do? And of course, the subsequent question would be later down the road is, well, what I was supposed to do, does that even make sense? Or am I using strategies that don't even work at all, right? So let's say you decide, obviously it may have been a good trade, that's fine. But it was a bad trade. There are two types of bad. What are the two bad trades? And amazingly, for a lot of traders, the biggest culprit is the one you're not even going to tell me about. You're not even going to mention. How could a trade be bad? Two different ways. Yeah, it could be. I mean, obviously it's bad if you don't follow what you're supposed to do, but assume you're following what you're supposed to do. What you're supposed to do, maybe you just have technically wrong, right? You're buying downtrends, whatever it is, you have a bad strategy. But there's a second issue. You could be actually doing something that's correct, that's technically correct, and that makes sense, but what happens? You get in right there, it's a beautiful trade. But what happens? You hit your target, but you stopped out of it back here because you said, oh my gosh, the stock is falling apart. Oh my gosh, I was green, now I'm red. Oh my gosh, the market's falling apart. Oh my gosh, Putin's invading. Oh my gosh, this, my gosh, that. And you get out because you were green and then you went red and you can't stand the thought of that. So you take a couple trades with little tiny profits. Now here's the funny thing. I talk to so many people that do this. They get out and they say, well, okay, I lost a little, I made a little bit, no harm done. They don't even know the stock hit their target. In other words, you could have good trades that you manage so poorly that they should have been big winners. And you can't do that. Like I said, we don't have the odds that we can throw away winners. You have to milk every penny that you can out of winners. You're going to goof up sometimes. I had a question here. I goof up sometimes managing. This last 2 weeks, I probably goofed up on 3 different occasions more than I have the whole rest of the year. You're going to do it, but what's the difference when I goof up compared to when the average person goofs up? And many of you listening to me are probably in my category, but for the average trader, what's the difference when I say, oh, I made some bad management there? What's different about me doing it? Yeah, exactly, Carl. I am acutely and completely aware of it, right? It's like somebody came up and punched me in the head with a bowling ball. I am 100%. And the average trader, Carl, doesn't even have a clue, right? Didn't even know that they managed it wrong. All they knew was they made a little bit of money, lost a little money, and they move on with their life. How do you know if you're taking bad trades or if you're managing poorly? Well, there's a simple way to do it, and I don't think I've actually run this by you guys in the free presentation for a while in the educational events like this, but the way that you can tell is to do this, is to take this little test. It's called an all or nothing test. And all you have to do is go back over your last 20 trades. I don't think I've done this with you guys in a free event in forever, but go back over. If you're serious about trading or getting better and you're trying to teach yourself, do this and send it to me, please. Send me the results. I'd love to see them. I used to get them all the time, and I'd accumulated literally more than a couple hundred of results. And if you do send them to me, you want to title the email, I was shocked and amazed, because most of you will be shocked and amazed. But simply go back over your last 20 trades. You can do this day trading or swing trading, doesn't matter. If you're doing a day trading though, don't pick more than like 4 per day. Like if you are a scalper and you're doing 20 trades a day, just take a random 4 from each day and go back and then recalculate your profit if you never ever would have managed it. In other words, you either stopped out at your full stop and you lost exactly whatever you risked, or you hit your targets, whatever they were. And as a day trader, if you didn't know your targets or you forgot them, just see what would have happened if you went to the end of the day. Now, that sounds pretty stupid because you might be saying, well, Paul, boy, I can't tell you how many times, I come up just short of that target up there, and that was it. And boy, if you're telling me you do all or nothing, that means that's going to be a full stop on. Yeah, that's a full stop on. Here's the amazing thing about this, though, is that when traders do this, 85% of the traders find out that they would have done better with all or nothing trading. That's a shocking number. That should astound you. Now, there's 2 types of traders that will not do better using all or nothing. And again, I'm not here to say that all or nothing should be your goal. I'm just saying if you can't beat all or nothing, you got a problem. Who are the 2 traders that will beat all or nothing? They're on opposite ends of the spectrum. Who are the 2 traders that will beat all or nothing? I'll give you one. That's a good trader who already understands this, who's already been through this. and manages so well that they actually beat all or nothing. Here's the second one though. If you're a really bad trader, you managing, if you go long at terrible spots, right? You managing will reduce your loss. All or nothing will have you at a full loss. So if that's something to be proud of, you beat all or nothing because you made yourself bleed slower is what it would amount to. So if that's the case for you, I wouldn't brag about that, right? There's not much to brag about to say, well, I'm going to keep managing because at the rate I'm managing, I'll go broke in a year, and if I do all or nothing, I'll be broke in 3 months. That's nothing to brag about. But if you find that you broke even for the month and you would have made $6,000 that month had you never touched your trades, there's a lot to learn from that. And that will tell you, because right there you will know, either I'm a decent chart picker, but I manage terribly, or I'm a terrible chart picker. Because if you end up doing better with, if you end up doing worse with all or nothing because you have all losers, not all winners, that's one way you can tell. Now, you would think that'd be a real basic question. And I bet you if I asked all of you, and I don't want you to answer, but if I had you all in a group and I made you all answer and I said, okay, how many of you are not happy because you're break even or making very small money or losing, and got you all in a group and said, how many of you could answer this question for me? I bet you less than 10% of you would answer that question because you wouldn't know. And of course, my thing is, how could you not know that? If you're trying to learn this, I don't care if you're part-time or you're swing trading or full-time, whatever you are, if you're putting money on the line, don't you want to be the best you can be? And how would you not go through the process of trying to figure out what you're doing? Management, so important. I use this as an example. This is from a couple days ago, but it was from the end of last week, Thursday. This is YUMC. And the strategy, again, we're talking about management. The strategy was what I call a tier 2 gap down. In other words, I had a very bearish bias on it. Based on the gap was something that may try to bounce for a little bit. So the preference would have been to get short on or after it bounced a little bit. Here's the daily chart just for fun if you want to look at it. I'm talking about this day right here where it gapped down. It obviously opened at the top of that red spot there. It moved up a little bit and then it fell very hard. And here's the intraday 15-minute chart where you can see it opening 15-minute bars green, and then it fell hard all the way into lunch. This here is an example of management. How do you get the most you can? And don't get me wrong, I don't do it right all the time. I don't do it perfect all the time. But what you have to do is to try and maximize what you're doing. And the first step is to understand on the particular trade you're looking at, do you know, what's the potential for the stock to do? What's the potential? Where is your possible target? Just the zip code. Where are you going with this? Well, in this type of a gap down, I knew that the potential zip code was really big. So that then lets me adapt a management policy that will help get it to a bigger target, right? If you're trying to get a swing target to rally $4, you're not going to get there if you're using a 1-minute bar-by-bar trail stop, or if you're using a running 5-cent trail stop, and it'll never get there. So to get where you want to go, you have to know where you're going and understand a concept that will help get you there. And in some cases, maybe you want to protect profit along the way. Maybe in some cases you don't. You just want to say, I want it to get there. I'm not going to touch it. So the question then, of course, if you had this trade, entered it right there, short, and the question becomes, well, it's easy if you see the chart ahead of time, but what if you're in this trade and you start making money? And, right there, you're up a whole day's profit. That's what I was. I was up a whole day's profit. You just take it there? What makes that decision for you? What concepts do you use to take profit? Or do you just sit there and use the seat of my pants method and say, oh wow, I'm up some money. I'm just going to take it off the table. See, you can't do that. You can't be afraid to make big money. You can't be afraid to make big money. Most traders are. They're just happy to take that minimal amount. Can't go broke taking a profit. But then, of course, the next couple of trades are losers, and then they're down for the day, they're down for the week. Does that sound familiar, anybody? I need a drink of Coca-Cola. Does that sound familiar, anybody? Okay. So like the opening slide said in this section, the first step is understanding the chart. It's the first step of everything. How do you get confidence? How do you know? Do you take money off the table because we hit the low of the day? Is that support, by the way? Is the low of the day support? Right here in this setup, this chart you're looking at, we gap down. we rally, we come back, and we start to bounce at the low of the day. Is that support? Technical question. Pretty solid answer to this one. Not a whole lot of debate. Yeah, no, it's not. It's not something that it has the support. If you dropped a bowling ball off the Empire State Building and held out a piece of paper on the 20th floor, that's about the support that it has right there, that much support. So it's not really an issue. So the stock starts to drop. I end up on this next bounce. I took some right there for what a visual. For a couple different reasons. Part of it was I was already up twice the day's goal at that point. It was a good trade. That's not a reason though, because like I said, you can't be afraid of profits. But also a whole plethora of things. Number one, I was in another trade at the time. Number two, this trade was one that was either going to free fall or would have caught. Notice also it's 10:30 reversal time. That's a big deal to me. 10:30. You can see the numbers up here. Shorted at 46.39, stop 47.01. Trailed one over 45.05, just right after 10:30 reversal time. It hit the low at 10:30 for that little bounce. And then target 2 was at 12.45. So we drop. And this whole time, would you have been able to manage it all the way down to here? Now, I don't always get to do this, right? But manage it all the way right down to here. And actually, this one, the low. I mean, the first bounce off the low of the day, I took. And you can see, well, it goes right into close. So you can see it never went lower than that. So the back half of that trade was a 6-hour trade, the first half a 2-hour trade. Now that's great. That's not the typical thing. I'm not here to tell you it is. But this just happened. It was just the last couple of days in management. The question I want to get across to you is to help make you successful, to help make you better, whatever your goal is how many of you would have taken the whole trade right here for 1 hour and been done and said next trade? Not a real question. I don't want you to answer. I just want you to think about it. Is that what you typically do? When's the last time you had a 6-hour part of a trade, a 5-hour, a 4-hour? I assume you all know what I mean by R, where we're talking about risk multiples. In other words, if you risk $500, you were up $3,000. That's a 6-hour trade. And we talk in R units because a new trader might be risking $10, an experienced trader may be risking $1,000. It doesn't matter. If you've made 6 times what you risk, that's phenomenal. As you move up your risk amounts, as you get better, that $60 will become $3,000, whatever it is. And that's what you need to ask yourself is how often do you get that? Because it's very hard to be successful if you never get some bigger winning trades. Now, there's different ways to make money. You don't have to get big winners in there. You could be a very consistent small winner person. That's great. But unfortunately, the common scenario for a lot of people is to be not that consistent at winning and then not have any big winners. And if you are inconsistent at winning, like you get less than half the trades right, and your average winner is just about the same as your average loser, where are you in the terms of profitability, everybody? Because this is probably a scenario I just asked that many of you are in. Where are you if you barely get every other trade right? And by the way, there's nothing wrong with getting every other trade right. As a matter of fact, that can be a phenomenal track record. But if you only average winning about as much as you average losing every trade, where does that put you? 50-50 batting average, 1-to-1 Sharpe ratio. It puts you in that break-evensville where so many people end up, right, Joe, for a long period of time. Because you just can't get beyond that. It's a very, very, very common thing. And that's for somebody who has some decent technical skill. I'm not talking about a new person. I'm talking about somebody who's been at it a little bit and they get stuck in that break-evenville for a long time. How do you get out of it? Got to learn what you're doing better. Either really push yourself to learn better, sign up for classes to learn what you're doing better. There's an incredible amount of stuff you can learn. I'm not here to push you to do that. But I'm just saying, if you want to get better, you have to do something. You can't just sit there doing the same thing over and over again, month after month after month, and never get better. More information on this, there is a prior event on the Free Stuff page called Tips on Management. You can check that out. Remember, when you're on the Free Stuff page, you have to also be sure to look at the archive section, because most of these I'm going to show you are on the archive page. Only the last dozen or 2 dozen are on the actual Free Stuff page. All right, next one. That was the longest one probably, because a couple of these, it's almost just the words I can read to you, and there's not much else to say. Here's the second secret. Traders should only take trades that exactly fit the parameters outlined in the trading plan. It sounds simple, but again, the facts behind this are staggering. Of the 4 secrets, this one is easiest to describe and really requires no technical expertise, just discipline. However, it is arguably the one that costs traders most money. Now, when I say arguably, this one requires no technical expertise. To be clear, to write your plan of what you want to do takes incredible technical expertise. But the problem is not really so much in writing it. It is for some people, but the problem is following it. The problem is doing what you're supposed to do on a daily basis. I know trading plans are boring topics, and I get critical of people when I ask a question and all they say is, and I say, what's the right thing to do? And you say, follow your plan. Well, yeah, okay, who cares? But what's your plan supposed to say? That's what it comes down to. You're going to make or not make money based on what your plan ends up saying on a technical basis. But if you never, ever follow your plan, you don't even have a chance to make money. That's the truth of it. You really just don't. The chances of making money as a trader without a real good understanding and a plan of what you're doing are almost zero. You might be able to have a chance if you're a longer term trader. As a day trader, I'll just make it real simple. You have zero chance of being successful if you don't have a decent trading plan that you write, execute, and follow up on a daily basis, period. There is no business, no war, no government, no sports team. This does not succeed from developing and following a plan. Anybody want to disagree with that in any way, shape, or form? Anybody? Sports fans? Ever see a pro team go out there and say, well, you're the quarterback, just go throw some passes and see what happens? Anybody know a team that does that? Or do teams sit in the locker room 3 out of the 5 days discussing strategy plans and how to execute? But in trading, for some reason, the common course for most all new traders is to just wing it. Trading's easy. Buy low, sell high. Anyone can do it. Or to pretend to have some kind of plan, but it is vague, imprecise, never used. Worthless would be the appropriate term. The following are a couple of slides from an hour-long presentation on the DTS Seminar Program Resources page. I have not made like a full trading plan or trading review lecture. It's been part of the seminar program. I may change that in the future, I don't know, but these are a couple of slides from that. But just to give you some idea, there's a whole hour discussion about trading plans that's in there, but it's a long discussion because I think it deserves it. There's a lot of stuff to talk about. But generally, the most common question is what people say, what should be in there? Well, an overview, how much money, what accounts you can use, how to handle a big losses picture, market bias formation and use, money management, starting off on paper, incremental risks and goals. We talk about some of this on the Friday Introduction to Technical Analysis event. Final risk amounts you're going to have, strategies, the heart of your plan, 1 to 2 initially, adding a wild card that introduces risk like a new trader, exact details, what must be present, what must not be present on the chart, and what you would like, but you do not have to have. It's funny, the typical thing for me, if I get a trading plan to review, is to get a trading plan that, however long it is, 2 pages, 3 pages, 10 pages, whatever it is, the strategy section is the smallest part. It's like 1 paragraph. And it's usually a copy and paste from a manual or something like that. The most important part, the thing that's going to make you money, most traders just completely blow off. And they're really big on money management, which is good. They're really big on how to brew coffee and how many push-ups they're going to do in the morning. That's part of their trading plan. But ask them what they're going to trade, and they really don't have a vague clue what they're going to do. And that's in a plan that they send to me that says something. Important in writing, must be objective, no adjectives. No adjectives. Adjectives are things that describe nouns. So we can't have a beautiful chart or a nice uptrend. It can't be too far from the moving average. All those things don't work. They're all subjective. You can interpret them any way you want to. Must be restrictive, so cannot produce many more results than your universe would want you to trade. The most common thing I have is I look at a plan and maybe somebody's trading a 5-minute chart and I'll look at what they have outlined and they're using a 500 symbol universe. And I'll say, you know what? I took a look at the charts real quick. There were over 130 possible hits for your trading plan concept this morning. Which one are you going to take? Which 5? Which 2? Is this going to be the first one that comes up? That's not very good, right? You're not being very particular, selective, or using your technical expertise if the best you can do is come up with a concept that yields 130 results in 1 hour. So you have to get more specific than that. Why is it if I showed you a trade that met your trading plan and you say, oh, no, I'd never take that. Well, why? That's what you need to rule out objectively right now. Must be clear, unequivocal, so a fellow trader could pick it up and basically understand it. Maybe not perfectly, but basically understand it. There's not a whole lot more I can go into here. People say all the time, here's the simple truth of it from doing it as a trader for so long. And I know tonight I'm just mostly talking. I apologize. Can be boring. Are you bored? But the biggest problem is people will say, oh, I need help with the trading plan, and oh, show me this and show me that. You know what it is, to be honest with you, and I just have to say this for your own benefit. People are just lazy. Nobody wants to do a trading plan. So they'll say, oh, can't you give me a form? Can't you show me this? Can't you do me that? And it's just that they won't do it. It doesn't matter what I would give them, they wouldn't do it, and if they did do it, they wouldn't follow it. You have to be determined. There's that Market Wizard story that comes to mind, that Jack Schwager went out, interviewed 25 successful traders, yada, yada, yada. And one of the things he found out they all had in common, well, they had nothing in common technically, but what he found out they all had in common was that they all lost half their account before they got serious. They got mad, they dug their heels in, and they came up with what they're going to do, and nothing in the world was going to stop them from doing what they're supposed to do, and they weren't going to do any other of the other crap that they were doing. Have any of you ever hit that level? Well, to me, it's an okay book. It has two incredible points to it. You're not going to learn much technically, but that's where you have to be. I mean, you have to get, a lot of people have to get mad and say, I'm not, they just come to trading like it's just a fun thing and poke around here, poke around there. They're down money. They try to get it back. They're down more money and they get mad. You have to get sometimes frustrated enough to say, this is not me. It's not going to happen to me. I'm better than this. I'm going to figure out what I'm doing. I'm going to do it right. I'm going to dig my heels in. Boom. And that's what a lot of trading is. I hate to tell you, but the actual technical brain power to trade is nothing more than a fifth grader. It's not. And I don't mean that to be offensive, and I don't mean it to be insulting, but you can't argue with me, right? It's not rocket science. It's not string theory. It's just simple stuff. A lot of it is discipline. It's the discipline to learn it, number one. So either figure out how to learn it on your own, and I'll help you a little bit if I can along the way, or take courses with me so you learn how to do it properly. But if you want, and a lot of people are just playing around for a while, that's fine. But don't play around to the point you lose money or you're losing more money than you would if you would figure out how to do it right in the first place. Most people just say, just give yeah, exactly, right. Show me the chart and I'll make money, right. Give me the trade, I'll make money. It's amazing how people really can't even do that many times. And a lot, there are different people. I mean, there's some people that just want to get the fish, because obviously I encountered both types. And there's people who just want to say, hey, just let me come in the room. I'll share, I'll take the trades with you. Give me the long-term trader letter. I'll follow the trades. I don't really care how to do this. I just want to, make some money. But most people aren't that way. Most people are like, okay, show me what you're doing and show me how to do it. And eventually I want to know how to do it, right? That's where most people are, but not everybody. All right, how much trading is psychological? Again, this is the closest on-point one, I think, to the concept of trading plans, I believe, because there's not, on the free resources page, on the free stuff page, there's not a direct thing on making a trading plan. Number 3, third secret, traders should always follow the power of the market or the individual stock, sometimes both, it depends what you're trading. When the market or stock is having a bullish day, the intraday trends or weekly trends are up by pullbacks. I'm saying intraday trends if you're day trading, weekly trends if you're longer term or swing. Do not play short. When the market or stock is having a bearish day and the intraday trends or weekly charts are down, short the rallies, do not buy pullbacks. The trend is your friend. It sounds easy. I decided when writing this I don't like that expression beyond the cliche that it is because of what I discussed in the last event that we did, which was called Do Not Try to Buy the Lows. It's a good one to watch. It actually is, I think, the last event. It was just last month. The trend is your friend. It sounds easy, but what is a trend? On what time frame? What do you do when the trend is unclear? The prior event, one I just mentioned, Do Not Try and Buy the Lows, is huge in talking about this, as it is not always easy to say that you're not following a trend. And let me give you an example of what I mean. It's kind of a little excerpt from that presentation. Would you go long right there? Just anybody who has a lot, zero, no expertise at all. Would you go long right there? I'm not saying could you, but would you consider that to be a good thing to do, where I put that little X? Would you go long right there? There's a chart, there's an uptrend. It's a simple question. It's yes or no. Okay, it's a 5-minute chart. Not there, no. But are we in an uptrend? Are we in an uptrend? Yeah, we are. So it's not quite that simple, right, to say, oh, follow the trend. Well, that can cause a lot of problems. And if you watch that last presentation, I don't want to go into it because it really covers a lot of those topics very well. As a matter of fact, you're going to see on a chart I'm about to show you in a minute that I shorted that there, and I was following the trend. What? Paul, that's impossible. You just said it's an uptrend. Well, this time frame was in an uptrend. This one was not. Right? So again, follow the trend. Not such an easy comment when you really get into it. The reason the slide is titled Follow the Power, not the Trend. Trend is too simplistic. The trend is your friend is too simplistic. Follow the power. There's another great video out there, and I have it for you in an upcoming slide or two, called The 3 Parts of Every Strategy. And in that 3 parts, this was a seminar presentation for seminar program members, but I released it to everybody because I think it's kind of generic, but it's really a great way to look at things. It's another way to look at what you do. And that's to say there's 3 parts of every strategy. And the first part is to find a picture of power. Why are you trading this thing? What about it makes you think it's going to go higher or lower more than the average stock? The last trade I showed you was a gap down that I know had really good odds of making the thing go lower. Not based on why it gapped. I don't even know why that stock gapped that day. I never know why a stock gaps. No clue. Most of the time it's on earnings, but I really don't know if they're good earnings, bad earnings, what they said. Could have been on some other reason. I really don't know. I don't care. What I know is looking at the chart, on some gaps, it gives me an edge to say, you know what, that's going to go lower. And that's what I try to look for. DTS trading tip, there is no shortcut to this one. Secrets follow the power. There's no shortcut. Catchphrases are nice, but it's only a full understanding of the language of charts that helps keep you on the right side of a trade. How do you know if you're following the power? Well, here's another test for you. See, you're learning some stuff here, some ways to, one of the things I said in the beginning was that it's about understanding, uncovering, finding out if it applies to you, right? This is one of the tests you can do to find that out. Go back over your last 20 trades again. Pull out and examine all of your stop outs. If you day trade, answer a simple question. Did your trade follow the power of the 60-minute chart? In other words, you shorted AMAT. That's a semiconductor stock. So the trade stopped. So this test would say, go look at the hourly chart of AMAT that day and tell me if it was up or down. Now, some days it may not be clear, but if your hourly chart was this on AMAT or even in the market, if it is a market stock, and you shorted it, well, then this would be something you'd want to identify as being violating the rule of following the picture of power because you didn't do that. Same thing as a swing trade, except did you follow the power of the daily chart? Same thing as a long-term trade. Did you follow the power of the weekly, monthly chart? Very simple test to identify if you are doing that. By the way, what do you do if you're trading and it's a sloppy chart, sloppy market environment, whatever it is? And I know one answer always is don't trade. Okay. But if you're going to do something, what should you do? What's a general big picture strategy? Long or short, when, where? In other words, in an uptrend, in a bullish stock or environment, you want to be long, period. In a bearish stock or environment, you want to be short, period. What about a messy environment? What do you want to do? Long or short? Right. Short rallies. Don't buy pullbacks, short rallies. Most traders want to be long all the time. Short rallies. You will get to your targets easier because they're easier to manage. Things drop faster than they rally. Just think of gravity. You always want to be shorting rallies. And that's why I'm long more than I'm short on average throughout the month, throughout the year, whatever. So a chart showing follow the picture of power. This is from Monday. Again, all recent examples, not going back to 1922. 60-minute chart at TWL was a time frame of reference. So how did this chart come to be? We're going to end up shorting right there. That's the big picture. So in other words, what I'm trying to say is that this, when I was scanning that night, there's the day of the trade. So if you just look to the left of that, don't look at that. That's the chart I found to say, hey, here is the chart I want to trade Monday morning. Why? Because of one reason. The power of the hourly chart. Take a look at where we are. This is just the perfect type of chart I like to see. Just a very controlled, right? We had this very controlled move down through here. And then it actually even is more impressive on the bearish side that it tried to move up a level, but then continue this powerful downtrend like this. Anybody else see something on the chart that makes it even more provocative that morning that I was looking to short it? There's another big clue on the chart because this was like a favorite type of thing, obviously, because it's actually this day was the only trade I did. But what else is on that chart that is just a big? Most of you should recognize it. Well, it's an hourly base. That's the strategy, Mike, right? But what else about this? Um, yeah, it was kind of mattressy, yeah. But what else? What else about this? There's another thing here. Nobody's getting it quick enough. That big red bar, right? We gapped up the prior day in a downtrend and just got smoked, right? I mean, that's what you want to see. It just got absolutely smoked and then went sideways all day. And that's just the perfect type of pattern to see. So this is here because it's a perfect example of follow the power. It's kind of hard to screw this up, to be honest with you. I mean, the trick is finding this chart. But once you find it, I mean, the only way this doesn't work is if it breaks its downtrend that day, because that would be, well, it wouldn't technically be breaking its downtrend, but it would be showing unusual strength that it hasn't shown in 7, 8, 9, 10 days. Or you take such a terrible entry that you can't stay with the trade for some reason. So that's the picture of power. That's the strategic chart. That's the chart I'd look at and say, that's going lower, I need to get short. And then the way I teach it is then we find an entry. So that day, you can see if you go back here, that opening bar, it gapped down a little bit, then ran back up, right? So it ran back up into here, shorted right there on what I consider to be a 1 minute retest and failure coming off the middle of that mattress in there. And boom, boom. Now, a lot of questions are here, like, would you have gotten short? Would you have gotten stuck short here? A lot of people would do that. And then you maybe stopped out. You probably stopped out, right? How do you know to wait for that? Well, and these are all technical questions you have to get to understand and learn and figure out. It's not a one-word answer I can give you, but it's understanding the whole chart pattern, understanding the math. As you know, I'm big in saying when I teach that there's three legs of the stool that you have to learn. Superior technical analysis understanding, math and probabilities in psychology. And math and probabilities to me is just, it's right there, is the top thing next to technical analysis, because you can do a lot with it. And a lot of it comes into the fact sometimes of just saying, well, if I do try and short it here, because it might have dropped from there, got to analyze what the odds are would drop from there, but then also what entry and stop do you have to use to make this work? And sometimes it just doesn't work. The numbers don't work, so to speak. So there's follow the power, just a very simple, perfect example of just a stock that is just purely weak. And if you take a reasonable entry, the only way you lose is if that chart decides to do something crazy that day, which they do from time to time. I mean, trends break and things bounce all of a sudden one day, but the odds are very much in your favor. So 2 events to watch for more on this follow the power topic. Do not try to buy the lows. That's very recently, so if you go to the free stuff page, it's just the last one or the one before that. And then 3 parts of every strategy that may be on the Hall of Fame section, or you may have to go to the archive page. I don't remember for sure. And number 4, I know we're on number 4 with 5 minutes left, but it's a pretty simple one. It's the 4th secret, if you will. It's not really a new rule. However, the first 3 rules are ineffective and worthless if you do not know the 4th rule. The 4th rule is simply to follow up to make sure you are doing each of the first 3 rules properly. Do not get bored and say, yeah, follow up. I know, I've heard it before. There's a procedure that must be followed. When this is followed, traders are always shocked and amazed at the results. I'm not going to actually survey you guys, but typically I will ask people at a moment like this, we're running out of time, if you ever worked overtime on a job, not trading, but I mean in a regular day job, and you ever worked overtime where you were on salary, where you actually didn't get paid for working overtime. And every time I ask that, there's a ton of people that want to say yes. I did in my past, worked overtime, put in more hours, didn't directly get paid. Maybe you're indirectly getting paid because you maybe make more sales or move up the company ladder, whatever it is, but you're not directly getting paid. And people, I'll ask 50, 60, 70. Anybody here work 70 hours a week at some time in your life on salary, not really getting paid for it? Anybody? 70 hours? I'll cut right to the chase. There can be some yeses there, yeah. So you did that for somebody else without getting paid, right? But now the question is, now you're working for yourself, whether it's part-time or full-time as a trader, what are you doing for yourself? And now I ask somebody to put in an hour to review some stuff. It's like, oh, wait a minute. Whoa, an hour? You want me to put an hour into this trading thing? I thought this was easy. So how do you spend your time is a big deal to me too. And no, new traders are typically way off in productive use of their time. A new trader typically is staring at the screen. How long is the market open? 6.5 hours? They're staring at the screen for 8.5 hours a day. Just staring at the screen as a day trader. I don't know how you can do that. I don't know why you would do that. And these traders usually lose all the time. There's some exceptions. But I don't think as a day trader, again, naturally as a longer term trader, time is not an issue that much, but as a day trader, I don't think you should be staring at the screen more than 2.5 hours a day, right? Yeah, but at least you own your own business. So, I mean, you are theoretically getting paid for it. The reason I say working for somebody else is because you're theoretically not even getting paid for that directly, right? Naturally here now, yes, trading is your own business. You know, you should put in what you need to. But the next point is that I'm not saying you should be trading 8 hours a day and that should be 1/3 of your time and therefore you're working 24 hours a day. No, I think you should be trading like 2.5 hours a day. And the other part of your time, 1/3 of it should be actually trading, 1/3 of it should be kind of prepping for trading, and 1/3 of it should be in follow-up. In other words, you should spend as much time following up on your trades every day as a new trader as you do trading. Is that understood by everybody, what I'm saying? You don't have to agree with me, but do you understand what I'm saying? So for me, the typical day trading day should be work 7.5 hours. As a new person, you can cut back when you get better. But you trade 2.5 hours, you prep a couple hours, and you follow up 2 to 3 hours. And this is the follow-up stuff that's so important. There is absolute gold in your prior trades, and yet almost no traders take advantage of it, right? You want to learn to trade for yourself, you want to do it, the first step that you go to is to look at your past trades. Now, if you're learning on your own, it's kind of a hit or miss system. It's going to be kind of a, you got to get lucky and figure out what to do and trial and error, if you will, to eventually adjust and figure things out. But the only reference you have are your prior trades. And there is tremendous info. I mean, the second class that I teach, we talk about this a lot, that there's all kinds of great stuff you can do with some tools to improve your trading, but it all revolves around you looking at your trades and figuring out what you're doing. Most people don't know what to do or don't take the time to do it. So again, there is not an actual free stuff page event devoted to following up on trading. These are a couple excerpts from slides from the seminar program. 2 critical parts of reviewing. Have your past trades been an excellent reflection of what you intend to do based on your trading plan? And then number 2, is the trading plan effective? These are the 2 things we have to do. The most common thing I get is somebody who writes a trading plan, never follows it, doesn't even know what's in it, is unsuccessful at trading, and therefore decides to make a new trading plan and throw that one out because it's not working. I know that sounds stupid, but it's yet probably the most common thing. So before you can even say if what you're trying to do in the market is effective, you have to make sure you're actually doing it every day to then gauge if what you're doing makes sense or not. And naturally, you have a bit of a shortcut if you get instruction or training. You're given the blueprint to start to say, here's what works. Now, you still have to make sure you're doing it right. And if you think you're doing it right, then as a student of mine, you send it to me and I'll tell you if you're doing it right, because if you're not making money, there's a reason. Either you're not following what you're supposed to do or you're simply not doing it right, one of the 2. None of this can happen and no improvement can be made if you don't have a written detailed trading plan about which every trade is based. Do you follow your plan? As a day trader, this process has to happen every day. Charts can be printed at any time, but the review must take place at least 1 hour after the market is closed. As a swing trader, print out charts whenever shares are sold at a stop or a target. This procedure starts the first time you take a paper trade and continues either forever or until you're happy with your profitability, with the condition that you will resume if you are not meeting your goals. The closest event to watch on the free stuff page is probably called Trading Stats and Analysis. There's actually a couple of them in there. They're like 6 months apart. That reviews some of these concepts, trading stats and analysis. And again, it's probably back on the archive page. Can you repeat the 2 classes you said we should watch? The 2 prior events, you mean, Don? You mean back? Well, there have been several. Like here's one here. So for this section, it was trading stats and analysis. For the prior section, it was these 2 right here. do not try to buy the lows, and 3 parts of every strategy. I think that's the one you meant probably, right? And then if we go back some more, there's how much you're trading is psychological, and tips on management. So there's 1, 2, 3, 5 of them, I guess. Okay. And that's what I've been doing at some of the events is just referencing some other prior events because, as we talk about a topic, you want to hear more about it, great. We're a ways away from it, but the next, and there'll be probably another free event. I forgot what the calendar says. There'll be another free event coming up in a scanning night. But the next big deal, besides the free events, is going to be the Introduction to Techno Analysis class because everyone gets invited to that. If you're here, you'll get an invite to that. It's not till April 22nd because we are still in the middle of this seminar cycle. As a matter of fact, this class coming up Sunday is the 3rd class, the GAP class. So we're a ways away from the next one. So put that on your calendar. Make sure to attend that if you haven't attended it. Also understand if for those of you that are interested in signing up for the seminar program, you don't have to wait anymore for live classes because of the home study program. You can start anytime you want to. And what I do like to drop these days is a link is just here's a quick little 5-minute video that just discusses what you get with the seminar program for those of you that are interested. All right. And then, of course, for those of you who are still out there trying to find it, there's the free stuff page. Access that. If you go to the home page of DTS, there it is, and here's the link to the free stuff page. And feel free if you have any questions. When you're going through that free stuff page, you can always email me. There's the free stuff page. Here's my email address. It's simply Paul@Discipline Trading Strategies, but that's a lot to type, so here it is. Any questions, anybody? All right, everyone. Then have a great Wednesday. We'll see you guys then.